Okay. Ja, der Rest, der jetzt reinkommt, ist gemutet. Also sind jetzt alle gemutet, da sind wir nicht gemutet.
Hi everyone. It's so nice to be able talking to you again on our GLCA annual meeting from Switzerland. And first of all, we want to thank NFK for being our host in this day. It's been a great pleasure, and they've been great to us. And we will be, of course, talking really interesting topics now. Now, on our first panel, we're going to talk about customs valuation and transfer pricing impact. And since we have not too much time, we will move forward in order to be able to cover all the specific topics. Today, I'm honored to be presenting my friends and key speakers of this event and this panel. Jean-Marie Saba from DS Advocates. Nice to having here, Jean-Marie. It's a pleasure. Eduardo Gardeta from Garrigues of Spain. Thanks again, Eduardo.
Thank you.
Also to being here with us. Fausto Capello from Gianni and Origoni in Italy. It's a pleasure having you also here. And Ricardo Romero, myself, it will be a pleasure to host and be the moderator of this brief panel. And since time rushes, my dear Jean-Marie, why don't you talk about every this case that is in everyone's mouth in the Europe, called the famous Hamamatsu case, and what is having the impact in regarding customs valuation and transfer pricing, and it's moving all this company to question themselves if they're really doing the things good or not.
Thank you, Ricardo. Hello, everyone. Yes, we have a lot of reason to start this panel with the Hamamatsu case, especially because was recently published a decision from the High Court in Germany, which in a way concludes the Hamamatsu case, but it also opens the door, I'm sure, and this is the purpose of our panel. So we had a lot of discussion about Hamamatsu. I'm going to share a very global approach and will give the floor to my colleague in the panel to comment for their jurisdiction. But let's just recall that, first of all, we could say that transfer price is firstly a tax instrument, which is more and more used from a customs perspective. But initially, the transfer price, and especially the transfer price, the APA, the advanced pricing agreement, and the documentation was intended to be used from a tax perspective. So we, customs lawyer, and our client, we have to deal with that from a customs perspective. So this creates a number of discrepancies and difficulties that we have to deal with. The first of them is that the concept and the methodology are not the same. We all know that for the tax purpose, we have the concept of the OECD, which are intended to be used from a tax perspective, and us from a customs perspective, we have to deal with the WTO customs valuation agreement, the last version of that agreement dated of '95. And we can raise the question of how this agreement deal with transfer price and especially with transfer price adjustment. And this is an open discussion, but some can state that we don't have clear provision in the agreement that we all apply in the world with this issue of transfer price adjustment. As a result, we don't have, I will come back to that later, we don't have in our jurisdiction, in our legal framework, we don't have clear instruments, including in the EU, to deal with that. So just to remember the fact of the case, Hamamatsu case concerned a Japanese parent company invoicing a German subsidiary for optical equipment. The price charged consisted of a fixed and a variable base initially declared as customs value, and it is known just at the end of the accounting period, the year period, whether it is downward or upward adjustment. All of these elements in the case are crucial because they are they highlight or explain the decision. Initially, the European Court of Justice concluded that the refund of duties as a result of a year-end downward adjustment of a transfer price could not be accepted, and that therefore the transaction value could not be changed. And this limitation was, for the court, justified by the need for customs authorities to avoid systematic requests for downward adjustment. Now, as I said before, we have the decision recently published. It was late September last year, 2022. The decision made by the German Supreme Tax Court, which confirmed the decision, of course, made by the European Court of Justice. Probably, I don't know if my colleague will share that view, but probably giving more clarity on the decision of the European Court of Justice itself, and hopefully giving some room to deal in the future with those adjustments. So we have now, let's say that the Hamamatsu case is finished, because we have the full range of decision made at the European level and at the local level in Germany. We know that it's not the end of the game. It's probably the beginning of the game, because in all jurisdictions in the EU, people were paying much attention to that decision of the German court. So we will have to see what will happen in the different jurisdictions. This is my. I cannot move. We need some technical support. I would like to share with you some comments regarding the second point of my presentation. Yes, here we are. I wanted to share with you a survey prepared by ICC, absolutely related to the same issue, how to deal with post-import transfer price adjustments, in order to see what are the instruments available locally. That's very interesting. Actually, the survey, provisional survey, let's say, was published last year, in 2022, with 24 contributions, showing that the situation is very different from a country to another. A great diversity. We still have to say. I'm sorry. I cannot move from a slide to another one. We have a great diversity, thank you, Ricardo, in the situation faced by operator in a given country, and contribution received still provide a good level of information on the approach of the authorities, the maturity of the subject, and the room for flexibility available to an operator, and the good practices to keep in mind. Since the date of publication of the survey, which is June, we must say that we will probably comment later that things have changed in some jurisdictions. For instance, in the UK, with a change of guidance making more difficult the acceptability of margin-based transfer price as transaction values. You have on that slide, but we have no time, I guess, to comment it, but you have on the left part of the slide the different principles set up by ICC. It was in 2015, the key point for private sector related to transfer price. And you will see that on the, let's say, 4 main proposals, at least 3 of them are Now it's okay? Okay, so I was just telling that the outcome of the survey is that the situation is not harmonized at all among the different jurisdictions. Again, 24 in that survey regarding how to proceed and how to deal with this transfer price adjustment from a customs perspective. Also, this survey is not a final report. We hope all together, and if possible, including with the GLCA, to complete and to complete this survey in order to lobby different authorities to adopt the good instrument. I don't know if I have time to comment on the third point.
Yeah, you go ahead. Yeah, I just want to ask all the attendants that are with us at home, if you can mute your microphone, please, because we have several people in the room, and it will help a lot if you mute all your microphones. Thank you. Please go ahead.
My last point, always related to post-import transfer price adjustment, is one interesting experience currently in China. I'm speaking on behalf of my colleague from China, and she shared with us an experience launched in May 2022. So again, many things happened last year, where Shenzhen City adopted a notice, customs notice number 63, providing as a pilot program a framework for the collaborative management by local and tax and customs authorities of transfer price used as import transaction values. Companies may apply for the collaborative transfer pricing management if it simultaneously meets the condition for the application of a customs valuation advance ruling and an advance pricing agreement. I have not mentioned before, but it's important for Hamamatsu's case to recall that the company benefited in Germany of an APA. We don't have enough background about information about that experience launched last year in China, but it's probably interesting to follow up the application that will be made by companies there and to see how it works locally. Again, interesting initiative. So it's out of the scope of the Hamamatsu case, of course, because it's outside the EU. Also, the Hamamatsu case and the German decision is not binding in the other member states, strictly speaking, from a strict legal perspective. But we can see that all those events, the ICC survey, the initiative taken in China, the Hamamatsu case, all that converge with a need for private sector companies to harmonize the approach and the convergence of transfer price from a tax and customs perspective.
I think it is really important to highlight several issues of the ICC survey that you mentioned, Jean-Marie, how the governments are intended to recognize this kind of post-importation adjustment upwards or downwards, the impact that could be on how to facilitate the importers doing those post-importation adjustments, and if they're willing to recognize their impact on several direct taxes like income tax. And maybe, Eduardo, you can tell us what is going on in Spain on that matter.
Sure. Good afternoon to everyone. Thank you, Ricardo. Yes, this is an interesting angle for transfer pricing, and it is the relationship between the discrepancies that we may find inside the tax administration in general terms, and I'm thinking of indirect tax authorities and customs authorities. Normally, you would see contradicting approaches in which direct tax authorities would like to see a very low customs value at import, so to maximize profits in a given country. And at the same time, you would expect to see that the customs authorities would like a high customs value to charge more duties where applicable. And we had years ago a very interesting case and experience in Spain. We refer to it by the name of the Coca-Cola case. And I'll give you a bit of background to understand what was going on and what happened. Coca-Cola Spain at the time imported concentrate to manufacture the soft drink from other group companies abroad. Of course, the company had its intercompany pricing. That's what was presented by Coca-Cola Customs. But the customs authorities felt that the value reported by Coca-Cola Spain was far too low. So it adjusted the value upwards and charged whatever they had to under the customs legislation. That was settled, but sometime later, the direct tax authorities came to visit Coca-Cola again and said, well, I do not agree with the valuation you, Coca-Cola, gave for the product, and even less with the valuation given by the customs authorities, and I will take a much lower value, giving rise to a very substantial assessment. The case went up the ladder, the chain of appeals, and arrived finally at the Supreme Court. And the Supreme Court was rather puzzled, in fact, and it says so in the decision. By saying, well, I don't understand what's happening here, because you cannot have part of authority saying one thing and the other part of authority saying a totally contradictory thing. It is true that the mechanics of direct taxes evaluation for related transactions are different from customs, but the principle and the philosophy behind all these adjustments, of these techniques, is basically to arrive at a market price between unrelated entities, both of them. So finally, the Supreme Court took the view that given that in that particular case, the customs authorities had settled the value in the first place, that should be valid also for direct tax purposes. So the Supreme Court dismissed the case of the direct tax authority, which was really good news at the time, but happiness didn't last long, as the Spanish direct tax authorities didn't like much that sort of approach by the Supreme Court, and maneuvered to promote the change in legislation, of course in Parliament, not the authorities, but they succeeded, and that's what to remark there. In 2014, the change took place into the corporate income tax law, whereby they implemented what we're calling the principle of ceiling of taxation, meaning that the valuation to be given in the case of related entities for corporate income tax is totally independent and nothing to do with the value you may arrive at for any other purposes, and the specific piece of legislation expressly mentions customs valuation. So right now, the situation in Spain is that we can find easily cases where the valuation for customs purposes is totally different from customs from direct taxes. And well, we are back at the beginning, but we have our piece of legislation against any potential of that.
So it is legal in Spain that you have a valuation for income tax purposes and a different, really different one for customs purposes.
Absolutely. This is where we are now. I don't know in your countries, but I may say that it's relatively typical in Spain that if the tax authorities don't like a decision by the Supreme Court, they again start to move in Parliament to get a change so that the jurisprudence by the Supreme Court is left behind.
It's a convention,
It is, but it is the law. So if they manage to change it and make it so we have a new law.
Yeah.
But yes, it can happen. It can happen. So, and now coming to the Hamamatsu case and the rest of effects this may have, what we are finding in practice is that, because this is a doubt we had in the past for many years, whether or not the customs authorities would rely to any extent at all on transfer pricing documentation for the tax purposes, or even in Jean-Marie was mentioning this a minute ago, on advanced pricing agreements. What we are finding is that this is the case. In fact, I would say that in customs audits, you would find that the first request is this sort of documentation for direct tax purposes, and well, more or less things are working well. It is true that typically the documentation for direct tax purposes is not very specific and not per type of product, clearly, but this is not creating so far at this moment lots of discrepancies with the customs authorities, but who knows what may happen in the future? Because obviously, if you need to go into such a detail, the work to be done can be cumbersome on the one hand, and on the other, there are no databases that we know of that would have such a detail. So I would think I would skip the next, because it refers to Hamamatsu,
Sure.
which was thoroughly explained by Jean-Marie a minute ago. So going to again to the Hamamatsu approach in Spain and how authorities feel this should be treated, it's clear that the position of the Spanish authorities is that companies affected by this type of subsequent adjustments post-import should seek to go through the procedure of simplified declarations, where they apply in cases, among others, in which the company doesn't have a final value for the goods, but just a provisional value, which is clearly the case, because it will be adjusted later on at some point in time. So clearly, the Spanish authorities are in favor of this course of action. It's expressly mentioned in the resolution approving the single administrative document procedure in Spain, that this is the way to go. You know that under EU legislation, this is subject to an authorization to be granted by the customs authorities. In our experience so far, these authorizations are granted if you explain properly and in detail to the authorities how your company works, or your transfer pricing policy, how long it will take to make the final adjustment. Normally, if this is going well with authorities, which is typically the case, the authorizations are granted. Okay. However, what we find in practice is that companies tend not to ask for these authorizations, not for transfer pricing, but also for future adjustments for royalties. And this is a point of concern for the customs authorities. In practice, we know that they have, authorities, they have sent targeted letters to individual operators of whom they are aware are facing this situation of future transfer pricing adjustments, to warn them that they need to ask for the authorization. Afterwards, they published a general notice of general outreach for everyone to explain in which situations operators needed to apply for an authorization. And this is the first time that they warned about non-compliance and potential penalties for non-compliance, right? And the final point I wanted to touch on is that these provisional or simplified declarations need to be adjusted later on when you have information. This is done through our recapitulative supplementary declaration, in which you would go to authorities and explain, well, I did this, and now the final result is this other one, because the adjustment already took place. This, in some situations, may be difficult in practice, So very, very recently, I would say in the last 3, 4 weeks, our customs authorities just released another notice in which they offer an alternative. So it won't be you, operator, who come to me filling out the form and reporting all the changes that have taken place at this point in time. But the other option is that you simply send all the relevant information to the customs authorities and they will do the work. In other words, this simplifies things and speeds them up. But it's more helpful for the importers in experience. So both things can be done right now these days.
That's interesting, Eduardo, because apparently in Spain, we are approaching more to a more or less previous ruling decision in order to determine what will be the correct customs value and applying that ruling to the daily, on a daily basis operation. So instead of recognizing the what should be the match between customs value or and for income tax purposes the real value, the market value of the merchandise, which is at the end of the day is what the WTO customs valuation agreement seeks. You need to declare precisely the real transaction or the real value of the goods in order to determine a fair import duty rate or the applicable duty. Yes,
yes, and if I may, you are absolutely right. The difficulties that we have when we deal, our client deal with post-import adjustment is that from a customs valuation perspective, we have to identify the real value of the goods at the time of import.
Exactly.
And when we are a few months or a year after, this is where the rules have to be adapted and where we have to say if Hamamatsu helps or not. But we have that difficulty.
So we're starting to see that there are key elements here that companies could take into consideration in order to protect their operation in a sort of way speaking. For example, you were talking about advanced pricing agreements. That of course is useful whenever you are talking about transfer pricing. But if we move to Spain, that doesn't work at all because there's a price for income tax purposes and there's a price for customs purposes. So it could have a legal mismatch of prices, and then you will have to ask for one. You have to be your APA, but also you have your customs ruling on valuation purposes. So I think this is looks to me like a whole deal of administrative burden for the importers in order to keep their operations safe, which I think is not the intention of customs and international trade, because it goes against trade facilitation by itself. So okay, but and Fausto, what can you tell about in Italy?
Thank you, Ricardo. Hello, everyone. Let me start by saying that the Hamamatsu case is certainly a cornerstone to deal with transfer price adjustments. But I believe that some open points remains and some legal matters arise from the case. First of all, I would like to say and consider that if the downward and upward adjustments are not relevant for custom purposes, we should consider what is the impact on the post-clearance assessment. In this case, I believe that the solution should be challenge them to the court if the purpose of tax administration is to recover custom duties and in certain countries, EU countries, also VAT. To the other side, we should also consider what could be the impact on the application for the refund of custom duties or VAT. And in this case, we could expect that the application will be dismissed by the custom administration. But there are also some open points. For example, I believe that it's very difficult to generalize the conclusion reached in the Hamamatsu case, because in principle they could be right if the adjustments are aggregated adjustments or claim rate adjustments. But if it's possible to identify the transaction, probably the conclusion should be different. The situation is not new in Italy, because in 2013, the Supreme Court of Cassation in Italy issued a judgment substantially reaching the same conclusion of the European Court of Justice and then the Supreme Court in Germany. What happened? In Italy, the Customs Administration and the Tax Administration issued some guidelines, joint guidelines, advising the operator that in order to address the issues raised by custom TP adjustment, it could be a good idea to use the simplified procedure. In general, in the European Union, it's possible to apply for a simplified declaration when the operator are not able to provide immediately at the time of custom clearance some elements. It's necessary authorization of the Customs Administration. It's necessary to provide, in case of import, a guarantee for custom duties and VAT. And it's necessary to provide the missing elements in a certain period of time. This solution is the only one that grants the operator the option to deal with the impact also for VAT purposes, because in case of export, the operator could have the right to purchase the goods without the application of VAT, considering the ceiling or the plafond. The other solution suggested by the Italian authorities is to apply for an authorization for the determination of the estimated value of some elements. This option is possible only for import. It's possible to provide some data to the authorities and reach an agreement for which the estimated value for some elements are binding for the future and are relevant for customs and VAT purposes also. Starting from 1997, this was possible only for the elements to be added or deducted from the custom value. After the UCC 2016, the situation is more interesting because it's possible to use the same procedure, the same authorization, also to reach an estimated value for the transaction value. So it's relevant, for example, in case of royalties. When we consider the impact of the Hamamatsu case, I believe that we should also consider the impact for VAT purposes. In this case, we know that the European Commission issued some guidelines also with the support of the VAT expert group. For VAT purposes, it's necessary to consider, first of all, the situation of the operator. A transfer price adjustment should be, in principle, not relevant for VAT purposes if the operator, and above all the importer, have a full right to deduct VAT. In other circumstances, we should consider other elements, because if the right to deduct VAT is limited, it's necessary to consider if the transfer price adjustments have a direct link with the transaction. It's possible to allocate it to a previous transaction and could be considered an extra consideration for a previous transaction. This is clear in general, more difficult in practice. In fact, in Italy, we have at least 3 different reply to letter ruling with apparently conflicting decisions. The end is, I believe, for custom purposes and VAT purposes, is always necessary to proceed on a case-by-case basis.
Sure. And it is interesting because apparently what Italy is doing is securing or using the custom valuation code provision of the provisional customs valuation declaration, which I think it's more or less in the WTO jurisdiction is recognized whenever you use any after importation adjustments such as transport, insurance, royalties. It is recognized, and I think the customs authorities are using that provision in order to allow the importers to declare a provisional customs value. But I think it is not the nature of that, because an operator will be facing a quite a challenge how they can consider this a provisional unless they include a specific clause on their distribution agreements, on their sales agreements, on their supply agreements. And if you don't introduce this type of clauses, then you're not allowed to consider a provisional customs value, like you do for insurance and transport purposes or royalty purposes. I think it is interesting how different EU jurisdictions are approaching the thing, because we saw in Spain that they, with a swift and direct way to do it, they say, don't get into any discussion. Any other taxes is different than import duty, even VAT. So apparently they can argue that. But then Italy approaches in a really different way, say, no. We're dealing with a provisional customs value of the goods, and it is really impressed me that if we think Hamamatsu gave some certainty, on my point of view, it doesn't at all. It's opened a huge way of discussion on this topic, because it allows what I'm seeing many or a couple of jurisdictions tackle the problem with a quite different perspective. So I think, please, Jean-Marie, you want to comment on that?
Probably the most important benefit of Hamamatsu is to show the difficulties that we face with those post-import adjustments. And maybe, I don't know, Fausto, if you will comment on that, but we have something quite new, which is coming in the EU, which is a centralized system for the authorization mentioned by Eduardo and Fausto. This is in progress. I think that in the course of the current year, we will have that system where will be published the authorization granted by local customs and with a potential benefit for other member states. So this should help in the upgrading and the harmonization of what we are expecting.
And the approach of the European Union will be on which basis? On the provisional value determination, or what do you think?
My feeling is that it will be on that basis, but we'll have to see. At least the centralized system will show the potential discrepancies among member states. So let's hope, finger crossed, that this will converge with.
Well, quite an interesting view. And moving to Mexico, last but not least, our customs law and our customs regulations are regarding, of course, custom valuation are pretty much I wouldn't say a copy paste of the WTO customs valuation agreement, but it is almost a copy paste of it. So, and it is like in the WTO law, it is recognized that transfer pricing principles could be applied for determining the customs valuation of the goods, determining the transaction value of the importing goods. So you mentioned some of them in your part, Fausto, regarding this type of requirements, like, for example, having some other similar operations performed in the past, or having other non-related parties performing similar operations and taking that value in order to comply with the transactional value and not other valuation methodology that the proper custom valuation code establishes. And this has raised me a lot of concerns, because if the same customs valuation agreement recognizes transfer pricing methodology in order to support transaction value of imported goods, then why jurisdiction like Spain are splitting them? And this raises me a lot of litigation arguments, for example, in Mexico, because in Mexican legislation, a treaty has a rank, it is a higher rank law than a federal law. So whenever we might have a domestic law stating that something for income tax purposes have their own value, regardless that for custom valuation could be another one, you could raise an argument, a constitutionality argument, saying that the high ranking law, it would be the treaty, it would be the custom valuation agreement, versus the domestic law, would be the income tax law in the case of Spain. And it also raised me another issue. We have in our constitution a principle of proportionality of the taxes. So if you're recognizing a value of a operation for income tax purposes and value-added tax purposes, and or a law establishes that you should recognize a different value for other tax or import duty, for example, which implies you paying a higher rate or using a higher value that represents a higher direct on another tax, then it will be not proportionate to the real value of the good. And I think, I don't know if there are something similar in other jurisdictions in their constitution recognizing this proportionality requirement. If you can use that, or the companies can use it whenever they think of challenging any tax assessment regarding this problem. So I think in Mexico the issue is quite similar to the other jurisdictions. I was looking at the ICC survey and the other countries what we're reporting, and it is pretty straightforward. Whenever you make a post-importation adjustment to move the value up forward, they say, don't worry, we will help you. We have a simplified procedure with a whole import form where you gather all the import declarations into one only new import form. You correct the value of all that operations of the last year, of the period that you are trying to adjust. And of course, since the value goes up, you got to pay more import duties, and that's okay. But that will reflect also on the income tax side, because it will generate you an additional deductible expense, and you can take that deduction. But you have to fulfill several requirements, such as amending the annual tax return in order to reflect that adjustment. We don't have a court presence at all, so specifically talking about this discussion. We have several customs valuation presence, like royalties, and how incomes could impact the customs value, the common operation issue on customs valuation, but not regarding what should happen when you had a post-importation adjustment going downwards, and if you request a refund of that, like the Hamamatsu rules. I think we are having a couple of cases ongoing in courts right now regarding that issue. I will let you know, guys, what could be the outcome of that, but we don't have that. And of course, the environment of the tax authorities in Mexico right now. Let me tell you something. Whenever the new administration got into office, they promised the people that no new taxes were going to be implemented. They keep that promise since 2018 up to now. But as you know, whenever there's no substantial tax amendment or refund in the country, the collection comes from another source, which is audit. Tax authorities are really auditing the companies really aggressively. And the other way to do that is to stall or deny the refund, the taxes refund request, such as the import duty or VAT upon this kind of adjustment. So having this environment makes the perfect situation in order for any downward customs valuation adjustment just be riskful, even when you may have all the arguments to file for a refund request. You will be confronting a tax authority by stalling by making heavy requirements of information that normally doesn't make any sense about it, but you will have to comply in order to go on with the process. So that is a huge issue. And as I explained, of course, you cannot stop overseeing the relationship between the customs value in the import duty regarding the VAT and the income tax. And I think it is a really interesting topic. I think from the European side, it will be key months or key following days to see what's happened. In Mexico, for example, I think the following year will be also important to know how this is developing in the courts. And of course, we will keep all our friends informed duly of this, how is running and what will be the outcome of that. I just want to remind to our friends that are looking at us that in case of having any question, please leave your question at the chat, and we will get back to you as soon as possible. We will try to answer that. Maybe we will be a little bit take more than a day or two to answer, but we will try to answer that as quick as possible. And we will prepare for our next panel. I don't know if Jean-Marie, please, you have
If I may,
please.
Eduardo, one last comment. After your comments, Eduardo, about the change in the law in Spain, you mentioned before, I was just wondering if the Hamamatsu case does not open the door to, because we have local legal framework in Spain, in Italy, in France, that we also have the UCC, the Union Customs Code. By the way, the UCC was not in force at the time of Hamamatsu.
Yeah.
It was before. So we don't have much time today to think about that, but an improvement of is the UCC better adapted to what we are discussing?
Well, we have a couple of minutes. What are your thoughts on that? I think the Union Code will be helpful on this type of case.
My feeling, I don't know if Eduardo and Fausto share the same views, is that we have more room with the UCC than with the previous code for those kinds of adjustments. And one more question, as I mentioned before, is would it be an option due to the impact of what we are discussing to improve, to change the customs valuation agreement, which is not in our hand, of course, but that would be the best option for sure for all of us, because with a clear provision in the customs valuation agreement, this will not happen, what you mentioned before regarding Spain. So it's really a major topic at the time where international trade change a lot, and we need more security in trade. So just wanted to share that.
Yeah, and that's interesting because rising this to the WTO at the moment we have and the crisis that is undergoing on the WTO, and it will be it is not so easy, but at least maybe we face a new moment or a new part of the discussion when the United Code enter into force, or in case a case regarding this topic get to the courts under this new code. Really interesting. Well, thank you, Fausto, Eduardo, Jean-Marie. It's been a pleasure talking with you guys. And to all of our friends, give it just a minute. We're going to change the panel, and we will continue with the seminar. Thank you.
Good afternoon and welcome back for the second panel. Today we'll be discussing CBAM, one of the most discussed new EU measures we had in a long time, but it's not the only one. It's one of those measures in a series of measures that has been launched by the current Commission. A lot to be discussed. So I guess we'll start right away with introducing the panel, and we have a marvelous panel here today with colleagues from our GLCA association, including our new president, Leonor Cordovil from Brazil. Welcome. Catarina Bellim from Portugal. Welcome to this panel. And our longtime friend, Christian Felder from Munich in Germany, also welcome to this panel. There's a lot to be discussed. There are still a lot of unknowns with respect to this. We'll try to tackle and suggest some of the issues that we see, that we have detected while discussing these issues. We will not only focus on the importer's perspective, but we'll also have, and thanks to the input of our member from Brazil here, we'll also have the perspective from the exporter side, which I think is very relevant here as well. But before we do so, I guess every one of us needs a little bit an update of the framework that will be established. So, Catarina, I'll invite you to provide that framework for us. For the listeners, for the people, for the participants in the conference, if you have any questions, suggestions, comments, please put them in the chat. Do not unmute yourself. It will be a bit too difficult for us to manage because we are a lot here in the room as well. Just forward or share your questions in the chat, and then we'll take a look. We'll try to tackle it during the presentation, or if that's not feasible, we'll review it in our meeting, which continues until tomorrow, and make sure that you get our comments on your suggestions as well. Let's start. Catarina?
Thank you. So a bit of a context for CBAM. CBAM is born out of the Green Deal agreement within the EU. So it's one of the policies to tackle climate changes, and the EU has a very ambitious goal, which is to become climate neutral by 2050. Within that goal, there is a milestone 7 years from now, 2030, a very demanding milestone, which is to reduce the CO2 emissions or the greenhouse gas emissions by 55%. For that matter, a very broad legislative package came out in 2021. And that package included a number of measures tackling deforestation, the new trading system for emissions in Europe, and carbon adjustment mechanism is one of them. So it's one of the measures, Fit for 55. The measure first was introduced in a proposal in July 2021. The proposal was negotiated among the European Council, the European Parliament, and the European Commission, and after discussions or the trilogue, as they call it, an agreement was reached to the final wording, which is drafted in a regulation that was published. It was negotiated in December 2022 and published in January 2023. If you read carefully the proposals and the tax policies that were in the proposal, there was it's clear that CBAM comes out of a shortcoming in the current European Union trade system for CO2 emissions. The European Union already has a price on carbon. The price on carbon is in a market that's called the European Union emissions trade system. It's one of the most advanced trade systems for CO2 emissions in the world. The industry and aviation, domestic industry and aviation within the EU needs to provide an emissions allowance for each ton of CO2 emissions that they emit, over a year. And the way it works is that to get those emission allowances, the companies can either get them by auction in the trade market or get free allowances. What happens within this trading system is that there are companies that have a surplus of allowances and companies that have a shortage. So there is a trading mechanism among the companies within the European Union that makes the price of the emission allowances change over time. And in February 2023, this price raised a high hit record of 100 euros per ton. This leads to a problem that was identified in the proposals for the CBAM, which is carbon leakage, meaning that aside of the typical costs for manufacturing, labor costs, material costs, and overhead, the EU industry and aviation has a plus cost from the CO2 goals. This can make companies that cannot add the cost or pass the cost on to customers, that the need to outsource or to transfer the production of goods to non-EU countries where the manufacturing cost is lower. CBAM came out of this identification of this problem, and as it is defined here by the State Secretary for Finance of Netherlands, this was in March 2022, it's an adjustment mechanism because it basically tries to put the same price for carbon emissions on EU industry as non-EU industry. So the example is pretty clear. If you would have a cost production non-EU of 10, you would add 65, meaning that you would need to have the same price cost as in the EU, which is 75. So this is basically what the drafting proposal called leveling the playing. CBAM will start with a transitional period of implementation, and it will start very quickly. It will start 6 months from now, in October 2023. Initially, it will start with what we can call a reporting period of 3 years, meaning that importers will be required to report the embedded emissions on the goods they are importing, and there will be no payment of carbon certificates. This period is a reporting period, but it is an important period because it is the period where the EU Commission and the customs authorities and the competent authorities will be able to gather all the information about the embedded emissions and also get a sense of what other EU, not EU, the emissions trading systems are there that can be similar to the EU trading system. So this is a very important phase to then pass on to a more definitive stage in which gradually importations of goods will be subject to a price on carbon through the rendering of carbon certificates. This is a period in which over time there will be an increase on the carbon certificates to be rendered, and a definitive period will be 2034, in which no free allowances under the EU trading system and no free allowances for the carbon certificates under the CBAM mechanism will apply. There are 6 sectors that are initially covered by the first phase of CBAM. They are the carbon-intensive sectors: cement, iron and steel, aluminium, fertilizer, electricity, and hydrogen. Hydrogen was added in the last negotiation of CBAM. There are ongoing discussions if organic chemicals and polymers will be introduced. It is expected for an extension of the products that can be covered by CBAM in the future. Linking CBAM to the European trading system for emissions. Although we are talking about carbon pricing, there is no cap and trade system. It will be depending on issuing certificates from the competent authorities. The current CBAM will not cover Switzerland, Iceland, Norway, and Liechtenstein because they are already either within the European Union trading system or have a similar system to it. And so from October 2023, it will be expected the reporting period, and from 2026, it is expected the payment of carbon certificates. The price of the carbon certificate is linked to the European trading system of emissions, and this means that it is expected for the same product to be the same price for carbon, and there will be a phasing out. So free allowances will be reduced over time, and full effect of either the carbon certificates issued under CBAM or the European trading system will come into full force in 2034. Now I'll pass the floor to Christian, who will tell us how it will work in practice.
Thank you, Katharina. Yes, let me start with a short illustration how CBAM is supposed to work. We have actually two sides of the border. We are talking about goods that are imported from non-EU countries into the EU that will be impacted, and for which CBAM certificates will have to be purchased. There is no impact for those goods originating from the EU, produced in the EU, as well as some other countries, namely Iceland, Liechtenstein, Norway, and Switzerland. The reason for this is that in these jurisdictions already an ETS system similar to the one in the EU is existing. So the EU thinks that there is no need to adjust carbon pricing in that case. Well, I said the goods will be imported from outside the EU into the EU, and so the question is, what's going to happen right at the border and afterwards? You need to purchase a CBAM certificate for the importation, but it's not that easy. So it's not just another box that you have to tick when importing the goods, but you have to keep a CBAM authorization. And in addition to importing the goods and declaring the goods for free circulation, you have to file a CBAM declaration, including relevant information for the authorities. Having a closer look at the players in the field, first of all, businesses. What's the impact for businesses? What needs to be done? And what are the major issues that we will be confronted with? First of all, there needs to be importation, and just like for customs purposes, importation can only be done by a business that is established within the EU. So in terms of CBAM, your status as an approved CBAM declarant is only achievable for a business that is established in the EU. Of course, the exception applies for Swiss, Iceland, Norway, and Liechtenstein. The CBAM declarant, the approved CBAM declarant, is a person who lodges a declaration for CBAM purposes for the release of goods for free circulation in its own name, or declarant can also be a person in whose name the application is submitted. That means one of the major issues that we are seeing and will be confronted with is that also for CBAM purposes, non-EU based businesses will be in need of what we call an indirect representative for customs purposes. We will also see that we need a CBAM declarant that is established in the EU, representing those businesses outside the EU. And as we all know, it's difficult to find indirect representatives for the importation of goods in the EU. And we can imagine that, of course, there is only a limited number of companies being willing and able to accept this additional liability that comes from CBAM obligations. Such an approved CBAM declarant can represent multiple importers, so indeed there's some kind of new business case for representatives in that respect. Second play in the field, of course, is the authorities, the administration, and the current regulation that is in place since December last year is giving floor to the member states to designate a national authority that may even be newly created. In many cases, at least that's what we heard so far, is that many member states tend to designate the customs authorities as competent authorities, but that's not that's not stipulated in that regulation by the EU. And the competent CBAM authority is the one of the place of establishment for the businesses, and they also have to keep database nationally, collecting all the relevant data for the declarants that keep an authorization, and as well file information in terms of the carbon content for each and every importation. If there is a failure in complying with the obligations, there are sanctions, there will be penalties, of course, that will be defined on a national level. And to our knowledge, currently many member states prepare to designate a national authority that is competent, but so far no member state did the first move, and we expect that to happen later this year in the course of May and June. There is a good reason for this to believe, because currently the new Commission is preparing a delegated act giving more details to the regulation, and it is scheduled for the 10th of May to be passed by the EU Parliament. So it will be the starting point for communication initiatives made by the EU Commission, and we expect that also national legislation and national authorities will move into the communication with the public from that point in time on. Some further details. If companies will import the mentioned product into the EU, they will have to purchase the CBAM certificate that is priced per ton of carbon dioxide that is imported. And it's not only that companies have to purchase certificates, they also have to calculate themselves the levy that they trigger with importing those goods. And this will be the basis for the purchase of the certificate. So businesses themselves have to make sure that they purchase sufficient certificates, and if there is no further information that is necessary for that calculation, the calculation can be based on benchmark values that are published, that will be published by the EU Commission. If businesses would purchase too many of those certificates, it would be possible to give those certificates back to the authorities, and so that would be eligible for repayment from the authorities. But after a period of 1 year, those certificates will become invalid, and there will be no chance to give those certificates authorities. And please keep in mind that there is no trade between businesses for such CBAM certificates in place. That's different to the ETS that is currently in place, where the trade between businesses is the actual goal of the system. There is no such trade for CBAM certificates. And needless to say, of course, all these transactions will be followed by the EU Commission. There will be a centralized database driven by the EU Commission, and there is also a system in the regulation that foresees some kind of verification for data that is declared and reported by businesses to the authorities. Needless to say that, of course, this type of system has some potential for circumvention and fraud. In order to avoid this, there will be also a verification system with approved verifiers that will come into place as of 2026. Let's have a closer look to the calculation principles. As I said, businesses have to calculate themselves the amount of levy, and they also have to calculate how many CBAM certificates they need to purchase. The calculation for the amount of levy is rather easy. It's actually the average weekly price times the number of CBAM certificates to be surrendered. And the levy is composed as the gray emission. That's a term that will be defined on the next slide. Less the reduction, less the carbon price that has already been paid abroad. So the country of origin has in place a comparable system where carbon dioxide is already burdened with some additional costs. This can be deducted from the gray emission itself, and of course also pre-allocated ETS certificates can be deducted from the gray emission. That will be the basis for our calculation. What's the gray emission? We have to distinguish between simple goods and complex goods. That means in the case of simple goods, the gray emission is the emission assigned to the good divided by the activity level of that good. That means we are talking about a certain amount of emissions, and this amount of emissions needs to be divided by the quantity of products that has been produced in that specific period. For complex goods, the calculation is a little bit more difficult because in that case, you also have to, of course, consider additional emissions that would have been caused by input materials that are consumed in the production process of our goods. So an additional factor that needs to be considered in that situation. There is one huge exemption for this system that I was talking about, and that is the import of electricity. In that case, the basis will be the average price of carbon dioxide per megawatt hour in the third country. And if there is no possibility to determine that average price, alternatively, the average price in the EU can be taken as a basis. And the regulation also stipulates chance for individual importers to furnish proof to the competent authorities that the actual emission for the production of that electricity abroad was less than the average value within the EU. That's, for example, the case in the case that the electricity was produced by using renewables. There is a short overview on the timeline and the obligations that CBAM declarants have to meet. On the left column, you can see the obligations that will be in place as of 1st of October 2023 for that type of transitional phase, which Katarina already introduced. In that period, it is necessary to file on a quarterly basis reporting to the authorities, including the quantity of goods that have been imported and also, of course, the total amount of embedded direct and indirect emissions in those goods, and the carbon price that has to be considered from the country of origin for those embedded emissions. As already mentioned, no payment so far, but an obligation for quarterly reporting, whereas starting January 2026, we will see that the declaration period is 1 year. So you only have to file annual reporting, including all those pieces of information as already mentioned. But in addition, CBAM certificates have to be purchased by the CBAM declarant. Well, what can we say about those two periods? What you can see from the nature of the first period is that obviously, as Katarina already stressed, the Commission and the authorities will take that period to collect information, to understand how everything will go and get some experience in that field. And I think that is wise as a business to make use of that transitional period as well, to try to understand how things work and also get in place some organizational measures within the company to be able to comply with all the obligations. As I said, there will be penalties and sanctions for non-compliance. So, of course, necessary to have a close look on organizational measures as well. So that's only part of those points that we wanted to spot where we see some trouble on the horizon. But I'd like to hand over to Leonor with one of those slides that represent some doubts that, in fact, are not only expressed outside the EU, but also inside the EU, with regard to general agreement on tariffs and trade by the WTO, where we could consider that the whole system of CBAM is not in line with the principles that are agreed based on GATT. But therefore, I leave the floor to Leonor.
Thank you. So I'm not going to use slides here. I think, yeah, in fact, I don't have slides. I just have questions and reflections and complaints. So, but from a Brazilian perspective, not only a Brazilian perspective, but also from any other developing country, I have some concerns because we hear a lot from the clients, companies, the industry, and we see that there are many questions unsolved and problems that maybe the EU should address in the future. But for now, first I would like to briefly summarize some of the challenges of the industry, especially for the exporters. It's almost funny because here in our panel we have 3 lawyers collecting and 1 lawyer paying the bill, right? So from the perspective of the country, or a country that should definitely suffer the effects of CBAM, I think it's important to understand that first of all, the exporter will have to calculate emissions correctly, meaning that obviously that, as you have already mentioned, we'll have the EU with some guidelines or understanding on how to calculate. But we will have to know this calculation and to understand if the calculation is the right way, right methodology, or if this is something that definitely we can discuss with the EU in the future to achieve something that is really reasonable for the exporter perspective. And secondly, it's important to say that from what we heard, that the exporter the company that cannot trade its emissions should lose businesses space in the end to the ones that can really trade, meaning that there will be, in my view, a competition for the country and the industry that is more organized. Then not necessarily a competition between or among industries, among countries that are really polluting less, which is a tricky thing because I think the idea of the CBAM should be much more to encourage countries not to be clean, right, to use renewable energy and other inputs. But I think, in my view, it will be in the end the competition for the industry that the country for that can really encourage industries to be organized and prepared for this new scenario. And also, it's important to understand from the perspective of the industry that there will be a penalty. Who will pay this penalty will be the importer, so here someone in Europe. But for sure, it will be the competition for the who has the best source, meaning that the source, the country, the exporter, that will be the more prepared and that can really trace and calculate emissions, will be the one convincing the importer to buy. So it's something that I think is not clear for everybody, or at least not at this moment. And the last point is that the industries affected, they are sometimes more important for one country than to the other country. So, for example, we have this list of industries, for example, aluminum, steel, fertilizers, and etc. And they are for sure more important for countries like Brazil, for China, for example, than for others. So definitely there will be some kind of treatment that is not equal for everybody in terms of here speaking in the WTO perspective, but that some countries will be more affected than others. So I think these are the basic consequences of CBAM. From, of course, nothing is really defined, but the basic consequences for exporters and for the countries like my country that we need to understand. But let's go to the reflection about the WTO here. I think it's important to, since the very beginning, to tackle some issues, some principles that we have discussed since the 90s and that are important here in this discussion. When we remember cases related to environmental issues in the WTO, the first one is the shrimp case. And the shrimp case, it was a case against the U.S. Basically, just to remember, this case was a case that the U.S. was telling everybody you can sell shrimps in my country, but you have to prove that when you were chasing the shrimps, you were saving the turtles. So the turtles were protected. And then at that time, the discussion was that first, if we could have environmental issues brought in a panel in the WTO, and the answer was yes. So this could be a discussion and was good for everybody. The second thing was, and then answering things that I think are important here in the discussion about the CBAM, is that you as a country, as a member of the WTO, you could have some kind of policy like the US had at that time. But firstly, you need to be transparent. So this should be clear to everybody, which I don't think it is right now for the CBAM, because we are learning, everybody's learning what will happen and maybe deciding, right? But secondly, you need to be non-discriminatory in the sense that you cannot treat other countries differently from your product or your own product. And secondly, the MFN, which means that you cannot treat them differently from among themselves, so the exporters. And I think all these discussions, that's my view, that all these discussions should come at a certain moment here in this, because the cases are really similar. And in my view, the most problematic thing here is how to make CBAM more objective. Because we should have rules, like you said, about methodology, about how to calculate. But what is green for Europe not necessarily is green for Brazil or for other jurisdictions. Let me give you an example. For example, when we mention aluminum, in my case in Brazil, aluminum is 80, we can say 80%, but 60% of the cost of production is energy. But in the case of Brazil in special, almost 100% of our energy is hydro. So it should be clean, right? So is this going to be something that should be considered by the EU when defining CBAM when applying? For example, aluminum coming from Brazil is considered as clean. Is the same for the other countries, or it's a kind of exemption? So I think there are many, many questions that should be discussed and should be solved, and there will be something for the future. And going again to the shrimp case, I think it's important to remember that at that time the WTO decided that the countries are free to establish their policies, their rules, but it should be something that is a public policy, meaning that you need to have a goal, you need to have an objective for this, for what you're deciding. And lastly, if it's going to harm someone, it should be your last resort, meaning that you tried everything, and then in the end, it's necessary and something that you are enforcing. Here in this case, we have a lot of text and papers saying that apparently, this should be discussed for the future, but food for thought. But for example, the UNCTAD published recently a study saying that the CBAM would have very limited impact over climate change. Meaning that, for example, just to give you one number, that if everything goes right, the CBAM will be responsible for cutting only 0.1% of global emissions. So it's a very low number comparing to the effects. And when we talk about effects, we see in this study as well, that developed countries should increase income in $1.5 billion dollars, and developing countries should lose $6 billion. So the accounting here says that it's not really proportional in terms of who wins and who loses. So I think there are a lot of discussions. As I promised, I said I would not bring slides, but just maybe a reflection for us here in this group. But the last point that I would like to address is whether we should have solutions, different solutions to cope with this inequality and bad effects. And one of the things that are really under discussion is whether the EU can come with something that is really a policy to help developing countries accelerating technology to produce clean products. So this is a long discussion, but this is something that maybe can be included, for example, in the regional agreements. For example, in our case, we are currently negotiating the Mercosur EU agreement, and this is definitely something that can come in the text. So we have some kind of a compensation in the end to developing countries that we consider. Right, our moderator?
Yes, absolutely. Well, thank you, Leonor, for these very interesting observations and suggestions. I think that is all very clear. In terms of this CBAM, I was just wondering, because, based on my own experience in Belgium, it seems that many of the businesses do not have that yet on top of their agenda. When I speak with businesses that might be affected, they let's say, take into account the potential postponement of the measure, or they are even not aware of the measure that will enter into force, although they will be clearly affected by it. I was just wondering how that is in your jurisdictions, Catarina, or
In Portugal, there's not much public debate. Recently, there was a new voluntary carbon market announced, but CBAM was not included in it specifically. So I would say that there is still not much awareness or preparedness, and certainly companies are relying on future postponement. I'm not sure if it will come because considering the target, right, 7 years from now to reduce the CO2 emissions. So I would say it's still a concept that is not very well known.
Christian, Germany, a very important country, member state.
From my experience, there's unfortunately not that much awareness in businesses. There are some players, of course, bigger players that are well prepared or are on their way to be prepared when it comes into force. But there are so many businesses that will be affected by those new rules that I have the impression don't have CBAM on their agenda at all. So they're not saying, okay, I identify CBAM as a potential risk or potential field where I have to do something and take some action, but they don't have any awareness of these new rules, measures that are 6 months ahead of us.
Yes, indeed. So if all goes well, if the planning holds of the EU Commission, then I think the first reporting needs to be made in January over the last quarter with penalties for not complying with the reporting requirement, penalties which still have to be decided at EU level, at member state level. What I guess the member states will take the responsibility here for imposing penalties on not reporting or non-compliant reporting. So, you know, if everything goes as it is planned, there's less or at least not much time to comply for businesses. I know from one of the business federations in the Benelux that they are doing a lot of effort to inform stakeholders, importers, to prepare for this. I think for one large company, they did like a case study, and it took them several weeks, months, in order to map all their products, the impact, the potential import flows, etc. So businesses that are affected by it or might be affected by it, I think should start to do their homework right now. And in that, I was just wondering, you know, we know now that at EU level, the awareness is probably not as it should be. Exporters will be affected as well. Leonor, is there something happening there, or business federation, sector federation, your trade ministry?
We were talking, in fact, about that. It's even difficult to find articles in our language about that. So we don't see a lot of discussion about it, and unfortunately, and in my opinion, when we see the profile of the exports, we see there are national companies and also multinational companies competing. For example, in Brazil, at least steel, aluminum. I think for all industries, we see both kinds of companies there. I think the multinational companies are really maybe thinking that there will be like a kind of a god that will come in the future and decide, and the national companies are really waiting for the multinationals to have some kind of solution. That's my impression. But so far, we haven't seen any kind of discussion.
And I think maybe a last point here to discuss is potential circumvention. It does remind me of anti-dumping, etc. I guess there are opportunities or some importers will see opportunities, or exporters, or can convince their importers that there are alternatives to this by perhaps slightly amending the goods in order to get them in another customs classification, and as such avoiding CBAM or other schemes that might be available in order to circumvent this. But that's something we'll probably have to decide. The ones who are planning this or contemplating this will probably not disclose that yet to us. So I think this is a very hot topic, whereby we still await a lot of information. But I think the general scheme is very clear. The concerns have been voiced here, both from the importer side as the exporter side. I think it's something that we as the GLCA will definitely closely follow from both perspectives, and we definitely plan to bring follow-up seminars or briefings on this topic in the weeks or months that come in this respect. So I would like to thank my panel today. Leonor, thank you very much. Katarina, Christian, it is always great to have these discussions with you. And I think we will now take a few minutes to go to the next panel, which will discuss nearshoring opportunities and the impact on the supply chain. Thank you very much.
Hello, friends. Thank you for staying with us. We're going with the third panel of this afternoon, and it's going to be the last one. And we're going to talk about nearshoring and trade barriers. And I'd like to introduce our panel members. I have Ricardo Romero from Chever Ruiz Samarripa, from Mexico. You know him because he was in previous panel. He's a shining star, so he has to be in this as well. We have David Stepp from Travel and Mooring from USA, and we have our host, which is Christina Rene from Nieder, Craft and Frey from here, the beautiful city of Zurich. Thank you for staying with us, and we'll start with Christina with introductory remarks. And Christina, talk us about nearshoring and the Swiss perspective, please.
Yes, hello together. I'm very happy to host this GLCA meeting, and I want to give you a brief introduction of what is nearshoring. You all maybe know the term offshoring, when you move your operations to a low-cost country, but in the recent development, there is a nearshoring initiative. That means that now all the operations will be either reversed to the country from where they were offshore, or you offshore new operations to a nearby country for various reasons. In the past, it has been the most important factor was the cost factor. That's why that's why the businesses have moved to low-cost countries. But it turned out that the cost factor is not the most relevant, or it has to be a combination of all factors. And that's why nearshoring becomes an interesting case. I will, being part of the GLCA member from Switzerland, I will also bring you some insights from a Swiss perspective. And whereas many offshoring opportunities were taken in the past with regard to manufacturing, also with regard to the dramatic change of information technology in the last decade, many offshoring opportunities were also taken in with regard to the IT services, which make this opportunity much more feasible. And therefore, many companies in Switzerland and other locations moved their operations to presumably more favorable low-cost countries. But however, after a first wave of offshoring services, for example, to India, many companies became aware that geographical and cultural factors are also relevant for the success of offshoring projects in the IT world, and therefore nearshoring began. Can we change to the next? This is also true in Switzerland for the Swiss banks. For example, UBS has relocated its back office operations in 2015 and 2016 to India, with a total amount of 4,000 employees or jobs. And so UBS had about 6,800 jobs in India. But as you all know, the lockdown and the digitalization during the Corona crisis showed that outsourcing operations are vulnerable and can lead to disruptions of businesses, which
made many of the outsourcing service providers come to a reconsideration of the location. And therefore, for example, UBS, as I mentioned in the beginning, now they have recently nearshored their IT operations to Switzerland, to Schaffhausen, Biel, and into Ticino. With regard to IT services, there was also there were 4 Swiss institutes who have done in a project